Thank you, Kimberly. I appreciate it. And thank you, everyone, for joining today. Like Kimberly said, my name is Alex Lyons. I am a sales executive here at Avalara on our Sage-specific product team. I've been on this team for almost 5 years now. And also during that time, I've been partnered with DSD for that entire amount of time. So have worked really closely with lots and lots of DSD customers over the last 5 years. And working on the Sage team does give me sort of a nuanced amount of knowledge about sales tax. It's, you know, a lot of manufacturers and distributors I understand that are using Sage 100. So sales tax is not always the obvious form of sales tax that you guys might be dealing with. So I'll definitely be alluding to a lot of that today. What the sort of agenda is to first of all just kind of address Nexus. If any of you are familiar with sales tax, you should be familiar with what the word Nexus means, but I'm going to touch on that and talk a little bit about, you know, why it's important. Also going to talk about audit risk and share a little bit about what I'm seeing in the space right now with customers that I'm working with and kind of what is going on, you know, post-pandemic with audits. And then also talk at the end, you know, kind of about if any of this does bring up questions, you know, how can you actually approach this? It does seem like a really daunting task when we go through all of this, but I always like to remind people that, you know, Avalara has specialized for years now in helping customers not only automate sales tax compliance, but also just answer questions around compliance and help you figure out what steps to take. So I'll talk about some of those steps and kind of what I am typically seeing with my customers today. So first of all, just what is Nexus? What does the word Nexus mean? So the word Nexus really just means a state or a company's obligation to collect and remit sales tax to a state. Now, if you are in a situation where you aren't actually collecting sales tax because you're not dealing with direct users, what Nexus also means is that you might have a relationship with the state in which you have to just report on your sales data. So you may not actually be collecting tax, but the word Nexus just means that you have established that relationship between you, your company, and the state, and you now have an obligation to be filing or remitting to that state based on what you're selling. So there are a few different ways you can create Nexus or that obligation. There's 5 ways, but honestly, I'm going to mainly talk about 3 of them because that's what I see most commonly in this space. The first is going to be physical Nexus. This is what most people come to me and are very aware of and have been aware of for a long time. Historically, where a company had an obligation to deal with sales tax was really just based on where they were physically located. So where they had an office or a facility. Now, something I do see get missed a lot is people are not aware of how physical Nexus laws have changed over the last few years. So for a long time now, it has not just been where you have an office. It can also include where you have employees working. Obviously, we live in a world where people are working remotely. So if you have remote employees in outside states, that is considered a physical Nexus trigger. If you have people who go on site to visit customers, whether that be for sales meetings or installations, deliveries, anything that puts an employee in another state on behalf of the business is something that the state can technically view as a physical Nexus trigger. Another big thing that I see get missed a lot is trade show attendance. The trade show attendance piece does have some nuances state to state, but it is something that can sometimes trigger Nexus, and it's always good to be aware of it. Now, economic Nexus is newer. It's not that new anymore. It's existed now since 2018. I'll talk a little bit more about that in the next couple of slides. But economic Nexus is going to impact businesses that don't have any physical Nexus in outside states, but might still be selling across state lines. So if you are selling into another state and you're meeting what that state has set as substantial economic presence in their state, then you can trigger Nexus from an economic perspective. I will talk a little bit about what those limits look like for each state. We also have a fully comprehensive list on our website that I'm happy to share with anybody after this call, where you can reference each state's limits. But physical and economic Nexus are the biggest things that I see with all of my customers. having triggered. Now, the other thing I see a lot of is affiliate nexus. Affiliate nexus is something that's going to impact businesses that have multiple entities involved. So if you're in a situation where you have a sister company or a parent company, and those companies share employees or share office space, warehouses, things like that, that can create affiliate nexus, which really just means you're going to share some of the obligation of that other company. It's very complicated, so usually that's something I would want to review, on a case-by-case basis to kind of help you guys figure out if that's something that's impacting you, but it is something to keep in mind if you've got multiple entities, that one entity can sometimes affect the other entity's nexus to a state. So to kind of dig a little bit more into the economic nexus piece, a lot of people are still calling, having questions about the South Dakota versus Wayfair ruling. I would say 9 out of 10 people that I talk to are in situations where maybe they still haven't fully evaluated what this case meant to their business and how it's going to impact how they're dealing with sales tax. So the South Dakota versus Wayfair case happened in June of 2018. So as quickly as July of 2018, the state started to implement these economic thresholds. So this case allowed the states to start setting what they deem as, like I said, a substantial amount of economic presence into their state, so that they would require companies that are selling into their state, may not have physical presence, that they would still have an obligation to file or remit tax to them. So each state was given the ability to set their own limit. So every state's different. Some of them have similar thresholds. The next slide goes into some of the more details around it, but some of the lower ones are $100,000 in sales or 200 transactions. So the ones that have the transaction and dollar amount are obviously targeting businesses that may not necessarily be selling a high dollar amount, but maybe you're selling a lot of different items. So there's a lot of ways that you can trigger it. It's really important to take a look at it. A lot of the states also look at gross sales. So a really common misconception that I get from clients is that they feel that this case only impacted those who are doing like e-commerce. That is absolutely not the case. The majority of the states are looking at gross sales into a state. So even if you are a manufacturer and every single thing that you sell is tax exempt, you still may technically have an obligation to be filing within a state. And I'll talk a little bit about, what you want to be doing if you're in that situation where you don't have any direct to consumer sales. But the main thing I want to take away from this slide is just to understand that if you are selling across state lines, this is something that could potentially impact you, and you would probably want to take a closer look if you have not already. So here are some of the economic thresholds. You can see California and Texas have larger thresholds of $500,000 in gross sales. So those are a little bit harder to hit. And then a lot of the states share that 100,000 or 200 transactions, like I mentioned. We do, like I said, have that page on the website that goes state by state and fully breaks down each state's threshold, as well as whether or not they're looking at gross or retail transactions. We do also have a free sales tax risk assessment that is on our website. That's a great way to kind of start this project. If you have questions about, am I hitting this? There's a free risk assessment on our website that allows you to sort of answer some questions about your sales volumes in each state and just kind of uncover if this might be an issue. Now, I will warn you that this is a free tool, obviously, so it's not going to give you a ton of information, but it's a good starting place if you just have kind of some curiosity around if this is something you're hitting. And if it is, I would always encourage you to reach out to us so we can have a more in-depth conversation, so we can maybe look a little bit deeper into the details of that. But that free tool is on our website for anyone to take advantage of. So complexity is growing and it's constantly changing as well around all of these rules. So the economic and physical nexus laws are changing constantly. Different states have different rules in regard to economic nexus, notices that they're sending out, reporting. The rules are always changing. I know recently I was just talking to Kimberly before we went live about the new Colorado rule that is going into effect July 1st. So there's constantly things that are changing around sales tax, and it is very hard to keep up with. Also, in line with that, the cost of compliance is going up rapidly. It's getting harder and harder for businesses. In the stage world, I'm dealing with a lot of small businesses that don't have necessarily the time and resources to dedicate to keeping up with all of this, and it costs money to try to keep up with it. It also costs money to try to get into compliance. So it's just getting more and more expensive, and it's not seeming to go away. So the other thing I'll say is that, it's not optional either. With the increasing pressure plus increasing complexity, it's just exposing a lot of businesses to more and more risk. And the states are absolutely capitalizing on that risk right now. I alluded to the pandemic earlier. If you asked me 2.5 years ago, how audits were going, it would be a very different answer than it is right now. The states are very hungry, very aggressive right now, and they're trying to recover, money wherever they can. And the reality is this is a place that they can recover some of that money. So unfortunately, when it comes to Nexus, proof of compliance is on you. So it is up to the business to make sure that you are staying in compliance and doing what you're supposed to do. The other thing is that, once an auditor does get a whiff that you might be out of compliance, you can kind of expect that to continue, auditor to come back, right? So a lot of the businesses I work with, once an audit has happened, they're going to get an annual audit. So there's a lot to keep up with in that regard. And then also, if you're not in compliance, you are running a risk of having to deal with potential back taxes, penalties, interest. That can get really, really expensive. So it's always, a really good idea to kind of evaluate where you stand so that if an auditor ever does come knocking, that you're not surprised, and also that you can make some moves before that happens to make sure you're protected. So why should you address this now? Again, the states are very greedy right now. I know that I have customers all the time tell me that they're getting letters from the state of Washington, the state of California. They're notorious right now for sending out letters that they might find your name in another business's audit, and they'll send a letter out. And the reason that they do that is because once there has been contact between the state and your business, you're sort of at their disposal. You have to pay what they ask for, and you don't really have a lot of options. If you do uncover that there is a compliance issue in a state before there has been contact between you and the state, you have options. And that's something that we do specialize in helping businesses work through, is if you're in a situation where there might be some liability to a state, you have options of entering that state through something called voluntary disclosure. Voluntary disclosure is an amnesty program that will guarantee penalty and interest abatement in that state, and it will also, in some cases, limit the look-back period. So it's a great option if you are in a situation where maybe you are out of compliance. The kind of catch to that is you have to know that it's necessary and you have to initiate it. You can't kind of wait for the state to come knocking. So it's something that I'm working with a lot of customers on right now, is through that voluntary disclosure process to make sure that they can get into compliance without having to, totally break the bank and paying all of the past penalties and fees that might be due. The states before the pandemic were in a budget deficit of almost $55 billion. And so an easy way, like I said, to recover some of that was through sales tax. And so that's honestly a big reason why Wayfair even came into effect, is that the states were trying to create new ways for sales tax to be able to be, collected, and also a way to inflict audits on businesses. And so that is, something, again, I'm navigating it every single day with customers, is helping them figure out where they stand from a compliance standpoint and how they can get into compliance without totally crippling their business. So just be aware, the states are very greedy right now. Also, a big thing I'm seeing with a lot of businesses are these growth triggers. During the pandemic, lots of businesses I work with have launched e-commerce sites. Maybe they weren't doing that before. That will totally change how you're selling and how much you're selling, and it's a big trigger into why you should take a look at economic nexus if you have not already. So you can see a few other triggers here, but I would say e-commerce is a big one I'm seeing with customers, and also the remote employee aspect of things is changing things for a lot of businesses as well. So talking a little bit more about audit risk, I've got some stats here. 60% of audits are targeting manufacturing, construction, wholesale distributors. All of that falls very much into the Sage 100 world. Honestly, the thing I want to point out about audits is that I always joke with my customers that it's very different talking to someone who has been audited versus someone who has not been audited. When you haven't been through an audit, all of this stuff doesn't really seem as important. Whereas once an audit has happened, you very quickly come to understand why it's important and why you need to evaluate all of this. And so, I always say you definitely want to have the luxury of doing this on your own time before an audit happens, rather than kind of waiting until a bad audit hits and you've dealt with 6 months of someone digging around filing cabinets in your office. So if any of this is bringing up concerns, I would just encourage you to reach out to myself or your DSD account manager, and let's schedule just sort of a consultation and see where you stand. And I'm always happy to kind of point you to some resources to evaluate. Another thing about audits is they're not black and white at all. It is all a very big gray area. I had a customer just about 2 weeks ago tell me that they had an auditor come in the state of Texas that they ended up having the same alma mater, and they got to talking and really hit it off, and the guy let them off, without any penalties. So that obviously went really well for them. And then she said we had another audit a few months later that went the complete opposite way. So, at the end of the day, it kind of depends on the auditor you're dealing with and the mood that they're in and how nice they're feeling. So, it's definitely not a black and white thing, and it's something that's gonna vary business to business and state to state. But some of the mistakes that I see with my Sage 100 clients when they have had a bad audit, a big thing that is impacted is the exemption management. And so I was going to get into that too. If you're in a situation where you are selling into outside states, but you're not selling direct to consumer, you may have a Nexus obligation. And what that means is you also have an obligation to be managing exemption documents for all your customers. If you don't have exemption documents for the customers in the states where you have created Nexus, then technically the state could view everything you're selling as just pure tax liability. And that's something not a lot of people are aware of. And so the exemption management piece is a big thing that comes up with my customers, specifically in the Sage world, because they may not have been collecting sales tax because their customers are tax exempt, but they're also not appropriately managing those exemption documents. And that's a big thing that's found by auditors, an easy way for them to slap penalties and interest on you, as well as back tax if you don't have the right documents on file. So that's just a big thing I would point out for Sage users specifically. And then you can see here, average cost of an audit, $114,000. A lot, I've seen kind of the breakout of that from different studies, and it kind of goes into how much time you as an employer are spending away from your job dedicating to that audit. The interest, the penalties, the fees, all of that, the counsel you may have to go pay, tax attorney or tax advisor to help. So this does very quickly add up, and it's not something that's always an obvious number in front of you, but that is what we have found to be the average cost of an audit for a business that's sort of small to medium sized business. So if all of these things that I'm mentioning today are raising questions, are raising maybe red flags in your mind, there are ways to combat this. And I always like to kind of preface this that I know that all this information can be a lot to digest. And if you're in a situation where maybe you feel kind of behind on evaluating your obligation and you're kind of worried about digging into it because of what all is going to be involved with fixing it, I always just say that is what Avalara has done such a great job of doing, is helping business navigate this process. If you do partner with us to do so, we will take you through all of this step by step, point you in the right direction at every turn, to make sure that you're doing the right thing, and also that you're doing it in the way that is most cost effective for your business. The first step that I would say 99% of my customers take in evaluating a compliance solution is to do a Nexus study. We also kind of call those risk assessments. The risk assessment or Nexus study is a tool that we use to help you evaluate where you stand today from a compliance standpoint. It points out where you might have Nexus that you're not registered today. It looks at any way you could create Nexus, whether that be physical, economic, affiliate, like we mentioned. So it's going to point out where you have Nexus that you're not registered. A big part of that process is also then moving into evaluating if you do have Nexus where you're not registered, is there any outstanding liability? Now, for a lot of my Sage customers, like I've mentioned, exemptions are a big piece of this. So technically you may look like you have liability, but maybe all you need to do to kind of cover that up before you get registered with a new state is to go back and collect exemption documents from your customers. So that's something this process sort of helps to identify, do you need to actually pay any back tax? Do you need to enter that state through voluntary disclosure like I was talking about before? Or do you just need to maybe go backwards and collect some exemption documents and make sure that those are up to date? So the Nexus study really points out where you stand from a compliance standpoint, and helps our team, which we do have an internal tax advisory team that will help you to evaluate the results of that study and kind of make a recommendation for what steps that you should take to get to a point where you are in compliance. A lot of times, once you've evaluated liabilities and if you do need to collect any exemption documents, the next step would be to register with the state. Now, if you're in a situation where there isn't any outstanding liability, we can just go ahead and get you registered. We have licensing services here internally where we can do it for you if you'd like us to. We also do have the voluntary disclosure services. So if you are in a situation that's maybe a little bit messier, we can always go that route as well. And then, once you're registered, if you go from 5 states to 25 states, obviously that's a very big job then to try to maintain tax rates for all of those states, trying to deal with exemption documents for all those states. So that's where, our software solution does come into play. So we have a tool that does integrate with Sage 100 that would allow us to calculate tax automatically for the states in which you need to be registered. And we plug that tax rate right into your invoice. So it makes it where you can add all the states you need to get into compliance, and you don't actually have to change anything about your day-to-day. So we would take care of calculating the tax if tax needs to be calculated. We do also have a tool called Avalara Cert Capture. Cert Capture is also integrated with Sage 100, and this tool is going to give you an automated way to collect and manage your exemption documents. It also works with your invoicing, and that when you're running an invoice in Sage, we will have the ability to cross-reference and see, does this customer at the time of purchase have a valid exemption document on file? If they do, it tells us not to charge them tax. If they don't, we would know to charge them tax. All of the information around your invoices would be pulled into our system, where we can provide you really detailed reporting on each jurisdiction. And if you'd like us to, we do also have the ability to actually file and remit your returns automatically to the states on your behalf. So we are a full end-to-end compliance solution. But all of this to say, this is a lot of information, and I would really just try to point out and make sure that everyone takes away from this that if you're in a situation where you have questions, a lot of times the Nexus study is really the first step that tells us so much about where you stand, what you might need from us, and where we can actually help you. So, these are some of the reasons that I'm seeing people automate tax management. What is the point of automating it? The first thing is accuracy. If you are in a situation where you're having to calculate rates, it is very difficult. There are over 15,000 taxing jurisdictions in the United States. Obviously, if you have Nexus in multiple states, that can very quickly become a full-time job to try to keep up with all of the rates in every jurisdiction. So our tool is going to make sure that everything is accurate. Also, from an efficiency standpoint, if you have an accounting team of 2 people, it doesn't do your business a lot of good to have 2 weeks of your month dedicated to sales tax compliance. So, the point of this is to outsource something that's not generating revenue for your business. Customer satisfaction, a big thing for my Sage customers, not only with the tax calculations, but a big thing is the exemption documents. If you are using cert capture, it makes your customers' experience really clean in that they have a very easy way to submit those documents. It takes the questions out of that. It keeps you from having to deal with faxing or, calling and having them send you something maybe that's wrong before they get you the right document. It provides them a very easy way to submit that document. It tells them exactly what they need to submit in an automated way. Risk management, if you are in a situation where you're not in compliance, this is a way to mitigate that risk. Make sure that you are in compliance not only right now, but moving forward. Our system can track any changes. If you do create new economic nexus in the future, our system will track that and alert you to it. So it's a great way to mitigate risk. And then if you are, trying to grow your business, this is obviously, you're going to be expanding into more states. So obviously this is going to impact you at some point if it's not impacting you already. So it's just, if you are trying to grow your business, this is a great way to take something off your plate and also make sure that you are, in compliance so that you can grow without having to incur liabilities. So that's sort of the end of my spiel. I would love to open it up to any questions that there might be. And I would also please encourage anyone that if you have, some specific questions about your business, that we can always have a consultation one-on-one as well.
Perfect. Yeah, thank you so much, Alex. So we did get a couple questions through the chat, and thank you for those that are asked early on. Please, this is your time as well, so go ahead and keep engaging with the questions area or the chat box. So what are the first questions early on in your presentation, Alex? The question is New York both the $100,000 and the 100 transactions, not either or?
I would have to reference the website. I don't have all the thresholds memorized, but on our website, we do have that listed state by state. So typically the way they would have it worded is $100,000 and the number of transactions, or it would say or. So if it says and, that means you have to hit both. So some of the states do have the and then some states have the or. So one or the other would create Nexus. I don't have New York memorized, but I can definitely, Kimberly, I can send the link to those thresholds that you can send out to all the attendees. And I would say reference that to see what the rule is.
Yeah, that's great. I love that you have that resource on your website, because obviously if it changes, you can update it and things like that. So that's great. Awesome. Yeah, thank you, Dale. Dale said the link would be great. So we will definitely get that in a follow-up after this webinar close. Another question is just what about international sales? Kind of a loaded question.
Economic nexus and everything we've talked about today is only going to speak to the United States. The United States is by far the most complicated place for sales tax. I know that I get lots of questions about Canada. Canada is very, very, very simple in comparison to the United States for sales tax. So everything we've talked about today in relation to economic and physical nexus only has to do with the US.
Great. Is there sort of an extended arm of Avalara that deals in international events?
We do. So we have a cross-border team. We also can help with VAT taxing. We have the ability to help with international taxing. It's just that typically if you have to deal with that, you will have already been alerted by that country or jurisdiction that you have to deal with it. So in terms of evaluating Nexus, that doesn't really come into the scope of this. But yes, we do have resources here at Avalara to help with international tax as well. So I would say if you have questions about that, definitely get up with myself or your account manager. And I probably wouldn't be the person to answer those questions, but we definitely can connect you with a resource that can.
Great, and that's helpful. Like even if you're considering selling internationally, I guess to know your options. That's perfect. So great. Okay, another one relates to the economic threshold. The question is, when you hit an economic threshold, are you automatically registered in the state?
Say, are you automatically what?
Registered in the state?
No, you are not. That is that's a really good question. So when you hit it, it is up to you to evaluate if and when you are creating Nexus in the state. So it's really, that's why it's so important to kind of do a risk assessment or a Nexus study if you're in a situation where you think you may not be registered in the right places, because if you have triggered Nexus in a state in the past and you didn't get registered, you could run the risk of having some past liabilities that need to be evaluated. So yes, that's a great question. You are not automatically registered. It's up to you to keep up with that.
That's a lot. Great. So another question relates to exemption certs. The question is, should I just have a database for certificates I can reference, or should I link them to each transaction?
So I have customers who, feel that they're doing a really great job of managing their exemption documents. They might have them just stored, in a local share and have them tied to the customer maintenance in Sage 100. If you're, really confident in that, then great. Always the better option though is to have it tied to each transaction. And so a way to do that is through using our cert capture tool. It makes sure that with each transaction that we are reporting to the state that transaction is exempt, and it gives a quick way to reference an exemption document. So it's not required, but it is a great way to, further eliminate risk if you do get audited.
I see. Okay. Oh, cool. And then the last one I'm kind of seeing in here is about setup, I guess, is how difficult is automation to set up? We're a small business and we don't have a lot of time.
Yep. So one of the great things about being a DSD customer is that DSD is actually a certified implementation partner for Avalara. So if you do decide to automate and use our system, DSD would actually help you to implement, and they would do all of the work for you. Generally speaking, I think that takes about 1 to 2 months, sort of depending on the implementation team's bandwidth. But yeah, they would do all of it for you. So if you, are, and I would say even outside of DSD, most of my Sage clients are in the same situation. They don't have a team to dedicate to setting up software. Absolutely, we provide resources to help do that for you so that you don't have to take it on internally.
Great. Okay. Another question came in just now. The question is, what kind of cost are we looking at for a risk assessment?
So we have 2 different versions of our risk assessments. This is where, if it is something that you're thinking about or have questions about, it would be really important to sort of have a consultation so we can decide which one makes the most sense for you. Our list price is $4,500 for the standard risk assessment. We have a premium risk assessment that is $8,500. The difference between the two is that one doesn't dig as far into liabilities as the premium does. Also, the premium is more appropriate if you're selling a product that's maybe a little bit more complex in terms of taxability. Construction materials, for example, is a very complex product to be selling and has varying taxability depending on where you're selling it. So the premium risk assessment takes things like that into account to make sure we're getting an accurate calculation of your liabilities. But again, I would very much encourage a consultation so we can kind of point you in the best direction for that. So like I said, list price $4,500 is one of the options, $8,500 is the other option. For DSD clients, we do typically offer a discount depending on which option that you go with.
Yeah, we love that. Yeah, and it's very common that this is sort of like the baseline, right? So that's
yes,
really,
it's very much the groundwork. Doing a risk assessment is the groundwork in this project. Trying to implement software if you have not done a risk assessment, whether that be through Avalara or maybe an outside accounting firm. I always joke it's kind of like putting a band-aid on a bullet wound, because it's not it doesn't really help to automate if you're not in the right places in terms of where you're registered. So it's always really important to do a risk assessment if you have not ever done that for your business. And again, if you don't use Avalara for it, I would encourage you to, ask maybe your accounting firm that you work with. It doesn't really matter who does it, but it's a great place to start and find out where your business stands and if this is something that needs to be evaluated further.
Absolutely. Great. So another question, is there a grace period from any state if this has not been addressed? We're using the old law, need over 500,000 before worrying about the other states. This is all.
The answer to that is very much, it depends. It depends on the situation in terms of like how long you have had Nexus in that state. And then it also depends on the state. Some states do have grace periods. Mostly that's going to impact, like if you have created an economic nexus, let's say this month, you might have 30 or 60 days to actually get registered. And that's what they would kind of determine as their being their grace period. Now, I will say that a couple of years ago, when we were just 2018 was the Wayfair ruling, and throughout 2019 and throughout most of 2020, I would say that the states were pretty forgiving in terms of people getting into compliance if they were late to getting registered. So they were being more forgiving. We are seeing less and less of that now. As just that's just a general statement. Like I said, it is very much just going to depend on the state and the situation, but as a rule of thumb, they are being a lot less forgiving at this point.
They need money, right?
Yes. Just like, I say, most businesses have lost money during the pandemic, so have the states. And so they're being very, very aggressive when it comes to audits right now.
Right. Yeah, that makes sense. Okay, Alex, another, just reiterating the fact that cost of the risk assessment one more time for our attendees. And I think, it's valuable that we actually lay that out in a follow-up email with this recording. But will you just revisit the risk assessment options one more time?
Yes, our standard risk assessment is $4,500. And then our premium risk assessment is $8,500. Typically, the DSD discount is going to be about 30% off.
Great. Well, if anyone has any additional questions, again, we will be happy to address them here. I think we've allotted about 45 minutes for this, but I think we've wrapped it up, and we have every intention of getting a follow-up email to all of you with these things lined up concretely and with the resources linked in the email so that you can check any states you're curious about. But of course, Alex is an exceptionally knowledgeable resource that I think merits that conversation. So I will go ahead and let you close, Alex. Thank you so much.
Yeah, thank you guys so much for having me. And last thing I'll say before we wrap is, again, if you have any questions, please don't hesitate to reach out to me. We can have a very no pressure conversation around this. I would say most of the time that I'm talking with people, it's a very informational conversation. So I'm very happy to answer questions specific to your business and kind of point you to a resource that might be helpful. Whether or not you want to evaluate our software, I'm still happy to answer any questions you might have.
Yep. Again, my name is Kimberly Tucker. I'm the Director of Marketing here at DSD, but you will most likely be hearing from your account manager just to gauge your interest and see if Avalara is something that we should discuss further. Thank you, Alex, for joining us and sharing so much on Nexus. And I appreciate you, and we appreciate you, all the attendees. Hope everyone has a great day.
Thank you.